Good evening, everybody. Thank you so much for joining us this evening. We got a great response to the last seminar, and that's why we have followed up with this one. And we hope that you can make the most of this session. We have had 166 registrations for this one, and that highlights the relevance and complexity of this topic. Please add your questions to the chat. We will address them during the Q&A sessions at the end. Just to give you the overview of this program, in the first 20 minutes, I'll be talking about 5 tax mistakes to avoid when selling Indian properties. Then for the next 20 minutes, Guru will explain property investments opportunities in Australia. And finally, we will have about 10 minutes for Q&A. At the outset, we have a disclaimer. This presentation should not be considered as tax advice. Please consult your tax agents and lawyers before proceeding further. We are sharing this information for everybody's benefit. I want to start off by giving you a bit of context about how Nobilis NRI taxation was formed back in 2016. It started with my own experience of trying to bring funds into Australia. In spite of being a chartered accountant and a CPA Australia with an international taxation background, I struggled to navigate through the maze of different tax rules here and in India, and to bring funds to Australia. Needless to say, it was a stressful experience, too complex, with no set process, no standard format. And Indian CAs don't understand Australian tax rules, and the Aussie accountants don't get the Indian tax rules. I realized I had the skills and expertise to help others in a similar position. And 6 years later, we are here. I could not have done all this without tireless efforts of my amazing team in Bangalore and Sydney. Thank you for all your efforts, especially Mangala. I also want to thank my associates in the mortgage and the real estate space. Okay, to start off, over the following slides, I'll be describing in detail the 5 tax mistakes to avoid while selling Indian properties and repatriating funds to Australia. As you may see, the ultimate objective is to bring funds from India to an Australian bank account after selling an Indian property. How do we do it? We have a few hurdles to cross before reaching that happy moment of having funds in our Australian bank account. The pandemic also made travel to India difficult, adding to the complexity. Let's look at the first one. Should you disclose Indian property sale in Australian tax return? This is a common mistake that people make and get into trouble with it here. There is a data matching program between PAN number and the TFN, and an automatic exchange of information system between India and Australia through G20 Summit Agreement. As an Australian citizen or a permanent resident, you should disclose an Indian sale of property in Australian tax return. Under the Australian tax rules, you are required to disclose your global income in the Australian ITR. It's also wrong to assume that if we don't bring the funds to Australia, then we don't have to disclose it in the Australian ITR. We can assist you with our customized tax minimization strategy, by which 60 to 80% of our clients end up not paying any taxes in Australia for the property sale. Property sales in India needs to be disclosed correctly, and if you disclose it voluntarily, there is no penalty. The second important mistake to avoid is overlapping months in the financial year. The financial year ends in India as on 31st of March. The financial year ends in Australia on 30th of June. It is advisable not to sell a property in April, May, June because of overlapping of financial years. Example, if you sell in April, then you will have to wait for 14 months to lodge your tax return in India, and you will have to wait around 18 months to get the refund. And if you sell a property in the month of March, let us take an example, then you can lodge your tax return within 4 months. You can claim your refunds within 8 months max. So that's why it's very important to analyze when to sell. Then second important point is about lodging ITRs, right? So you are claiming a dual tax exemption here. Then if you sell your property in April and we are in the same financial year for an Australian ITR is concerned. So how do we claim dual tax exemptions within the same financial year? It's little complex, not as straightforward as it is. In my experience, the best time to sell is in December and January. Perfect for us, isn't it? Because of the Christmas break. And we get 2-3 months time for the compliances and other things. By end of March, we would have finished all the compliances, and we can go ahead and lodge our tax returns. And third tax mistake to avoid is not doing Australian tax planning before the sale. Planning the Australian tax return beforehand will help you minimize overall tax liability, both in India and Australia put together. Just to give an example, reinvesting your funds, let us say 50 lakhs rupees in bonds in India, does not attract a capital gain tax in India. And this option may be suggested to you by a chartered accountants in India who may not be fully aware of the Australian tax rules. This tax exemption is not recognized in Australia, and you will have to disclose it in the Australian ITR. In our tax advice report, we consider your tax liability and cash flow requirements to suggest 4 different options for you to choose from to minimize overall tax. And we also consider visa conditions and rules, a date of permanent residency, and date of purchase to apply a tax minimization strategies. The fourth tax mistakes to avoid is not applying for lower withholding of tax certificate. As you may aware, there is a TDS of 20% on sale price. So this 20% is withheld from your sale price and remitted to the tax office in India, and you have to lodge your tax return and claim the refund. So this 20% is on the sale price, not on the capital gains. That means even if you incur a loss while selling a property, still the 20% will be withheld. Lower withholding of tax improves your chance of getting funds faster. If you have already given a deposit here in Australia and require funds immediately, this is helpful. It usually takes about 6 to 8 weeks to do this, and it is a good idea to get in touch with us well in advance of your planned sale. The fifth mistakes to avoid is the NRO account. These are basic documentation needed, and the funds get stuck in India because of something simple like not having an NRO account. There is a 5% withholding tax applicable for savings bank account now. So as the Australians, we can't have savings bank account in India, and we need to convert that savings bank account into an NRO account. However, we don't have to have an NRE account. So in the most of the cases, funds are deposited into your NRO account. The second one is the PAN card. Without a PAN card, you can't sell a property in India. You need to have a PAN card and make sure that addresses are properly reflecting there and KYC documents are submitted and previous ITRs are up to date. Just log into your income tax portal in India, make sure there is no tax notices or any issues in your PAN card. These are small little things to make sure that you are ready for selling a property. Otherwise, the funds will get stuck in the bank account. How much can you transfer? Is that at $250,000 or it is a 1 million USD? So for us, it is a 1 million USD. That means essentially 1.3 million Australian dollars. If you want to transfer more than that, there are different set of rules. But for our discussions, we are just keeping it at a $1 million. You need to have 15CA, 15CB certificate, and which is issued by a chartered accountant, and there are simple process to get a chartered accountant certificate. You can approach any chartered accountant or you can approach us. We should be able to verify your documents and issue you 15CA, 15CB. Mostly the banks are insisting for 15CA, 15CB to make sure that the funds are properly accounted and funds are tax suffered. So that's why the banks are insisting on 15CA, 15CB certificates. At last, the happy moment is here. Your funds have landed in your Australian bank account. Now you are free to invest it any way you wish. This slide shows a range of services which we offer, which includes 15 minutes discussions with me, absolutely free of cost. We will send you all a link to the calendar for a 15 minutes free discussion. Feel free to book a call with us. We can issue you a return tax advice and filing Indian tax return as well as the Australian tax returns with the dual tax benefits. We have a network within our client base who are looking to buy Indian properties. And if you're looking for a buyer for your Indian property, you can certainly assist you with that. Alternatively, if you have already found a buyer, we can help you with the sales and repatriation process. Best to reach out to us at least 6 weeks before the sale. All our partners have a good understanding of the requirement of Australian permanent residents and citizens selling properties in India, and you'll be in safe hands. Our vision is to offer a one-stop solution to sell your Indian properties and bring funds here and build your real estate investment portfolio in Australia. We offer peace of mind with a lot of hand-holding from our Indian team, value for service. This will reduce uncertainties in this process. Your funds are definitely going to come to your Australian bank account. I'll take your questions at the end, and you can add them to the chat box if you wish. Over to you, Guru. Thank you.